please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
It's fairly been quiet for the markets, the equity markets that is. So let's give some time to commodities and find out what's brewing there. Manisha Gupta, our commodities editor, joins in now. Hi Manisha, good morning. What's happening there?
Well, thank you so much for that, Sonia. We have seen a lot of movement come in here, especially with the crude oil prices, where you have seen some strength come back here. Well, to begin with, there is no final word yet on Iran, on whether or not the US is going to reintroduce sanctions there. So that choppiness, of course, continues to support the market. Add to that the fact that you also have seen the distillate stocks in US decline, and that has been supportive. We also are looking at speculative long positions at record highs. So there actually is buy on every dips happening. There is no sell on rally. Markets are looking at very strong volumes coming in on the higher sides as well, and that is keeping the prices up. The gold and silver prices in the meanwhile have gone in for profit taking. You have the US dollar trading at a 3-month highs. There is basically no geopolitical tensions brewing up right now, no further development, and that's led to some profit taking here as well. This market would watch out for the ECB monetary policy meeting today and also the Mario Draghi press conference. Further direction in currencies and this space would come in from there. The base metal prices have been under tremendous pressure in the New York session yesterday, and Shanghai has seen some more follow-through selling coming in for this space. Aluminum prices are trading nearly 2% down on Shanghai, and we've seen that cut come in here as well. The sharp decline, though, has come in for the zinc prices, where we saw the LME inventories gain up by 15% in one single day yesterday. So after nearly 2.5% decline overnight, Shanghai has opened a couple of percentage points on the weaker side as well, and that's exactly what we have seen in the Indian markets. Almost everything in metals is trading on the weaker side, barring steel, which is at a 7-week highs, but almost everything else is watching out for some more bullish cues on that. KDR Commodities is where we have strategies from today, and they have a buy call coming in for the energy sector. They have a buy in case of the crude oil prices, where they expect the prices to cross above 4,600. They also have a buy call coming in for the natural gas prices, with targets at 191 plus for that one.
Okay, all right, Manisha, thank you so much for that. Well, let's come back to a big story here, not just in the equity market side, but we're also talking about the city of Mumbai. The Maharashtra government cleared Mumbai's long-pending development plan. The blueprint will pave the way for Maximum City to have more land available for building homes and commercial spaces. We spoke with Niranjan Hiranandani, co-founder and MD of the Hiranandani Group, who feels this development plan is a move in the right direction.
The basic idea was to see that the target of 1 million affordable housing should be achieved. That was the target which I think Mr. Devendra Fadnavis had given it to the development planners, that we need to achieve that kind of housing in order to make a paradigm happen. 45% of the people live in Jhopatpattis in Mumbai, and if you count dilapidated and other housing, my gut feel is more than 60 people are living in houses which they should not be staying in as far as the city is concerned. So I think the new development plan clearly makes a mandate in order to move in the right direction.
Okay, very noble thoughts, but is it going to work? That's the question. Ghulam Zia, Executive Director, Knight Frank, is joining in. Ghulam, 2,300 acres of land being given to the city. And I remember, because I used to cover the mill land clearing up back in 2005, that was 600 acres. This is 2,300 acres. FSI being increased massively. Whose plan is this anyway, and does it benefit Mumbai?
Yes, of course it does. Now, question is whose plan it is. I'm sure this plan is from the urban planners who want to really decongest the city from the slums and dilapidated buildings, etc., to be given way for new development and a decent home for people. So, of course, the planners are behind it, and I don't want to read more than that into that. And however, in terms of the future, of course, while we are looking at the brighter side of it with so much of development coming in and people finding homes, the burden on infrastructure is something to be really worried about. However, they have taken a few steps of a mass rapid transport system like metros, etc., also falling in place. So hopefully it will be a balanced development plan, but future we'll have to see whether we are really on the target, because we've had a very notorious past where we have actually digressed from the targets that were given to us, and where there was supposed to be affordable housing. Today what we have are the swanky, absolutely top-end residential developments happening. So maintaining the focus is going to be the biggest challenge as far as I see.
Exactly, that's the point. I mean, development plans have a very poor track record as far as implementation is concerned. And Ghulam, as we know, 50 years since it was introduced, this is the third development plan. So the view in the market is that this plan itself has lost its relevance after the chaotic manner in which the city has been growing. Is that your sense as well?
Not really, not really. I won't say it has lost its relevance because, the planning of any city has to be done in this way only, that every 20 years we have to create a plan which would last us for the next 20 years. So what we are currently talking about is something which will really, take care of our requirements in 20 years from hence. Of course, 4 years of that is already passed because this will be 2034, the next DP will be coming in. But for next 17 years, 16 years that we are looking at, this plan, in my view, is good. With infrastructure also coming in place and focusing on housing for poor, which has been completely neglected historically. So for the first time, we have absolute focus on housing for poor. So a balanced development plan will emerge in times to come. As I said, my only concern is that we should maintain our focus.
Ghulam, I want to talk specifically about this massive FSI increase from 1.33. It's 5 now for the island city for commercial, 3 for residential. FSI has been, doubled for commercial in suburbs. It's been increased for residential as well, particularly for developers that are operating in the island city, and several of them are listed as well. What are the current inventory levels like, and will so much of inventory be absorbed?
Well, here two things I would want to highlight. First is that the whole understanding that from 1.33 it has gone to 3. I would say we'll have to look at it from a different perspective because we also had whole lot of fungible FSIs, etc. coming in island city as well. So normally it was 2.5 to 2.6 FSI in any case. So this 3 is the marginal increase, I would say. However, then you have a lot of other schemes also coming in. Like earlier we had the parkings and this and that because of the FSIs were shooting up way beyond that 1.33 that you and I are aware of. However, now next topic is about inventories. Yes, inventories of high to super end of the residential stock is huge. And something which, like we have the herd mentality. The moment we had 1 or 2 of the good developments coming, everybody wanted to follow the suit. That time is over. So people, the developers specifically, have realized that there's an end to where the high-end market has to really finish itself, and then we have to look at the mid to low end, and that's exactly what the focus of the DP today is. So if you are getting into all this no development zone land coming in for development or additional FSIs, etc., huge amount of the benefit has to accrue to the mid to low end of housing, and that is what has been completely wiped out from South Mumbai because of whatever plans we had earlier. So that is where the focus is bound to shift, and the inventories that we are talking about will be of a different category. What we will create henceforth will be entirely a different stock. So I'm not unduly worried about the inventories overhang, but I would rather say that here we start a fresh new chapter in real estate. What we shall look forward to are mid to low end housing in South Mumbai, which was so far unbelievable.
So I can buy a house in South Mumbai now? Is that what you're saying?
Well, the right was, I said, if we maintain focus. If the focus is maintained, I'm sure you and I both can afford one. Otherwise, both of us will have to go to Mira Road or beyond.
Yeah, or we have to perhaps, cut off our arm or our leg to sort of fund that house in South Bombay. But Ghulam Zia, thank you so much for joining us. We run out of time. Well, that debate is endless, but we need to take a short break. On the other side, we will tackle... Hi, welcome back to Bazaar Morning Call. The Nifty in the April series has made a strong comeback after a 1,000-point correction in the previous 2 months. So ahead of FNO expiry, Yogesh Radke, the head of quantitative research at Edelweiss Securities, joins us on the phone line to give us his views. Yogesh, hi, morning. We have faced resistance around this 10,600 level. As we get into the new series, what do you see as the markers for the Nifty? And do you think this level could be taken out?
Yeah, morning, Sonia. For the April series, we had a very strong comeback after the February and March fall which has happened. Nifty has risen by more than 600 odd points from the lows. We believe that for the May expiry, we'll have some amount of volatility and some resistance at a higher level. We as enter into the May month, the election uncertainty or the volatility will also start chipping in for the market. Okay. So for the the May series, we may have, say, certain upside about 10,700 odd, but on the downside, we may come down by around, say, 400 odd points from these levels also.
Okay. Yogesh, this rollover itself, at the moment, Nifty rollover is only 45%. Do you think that the Nifty will be, the rollovers are likely to be around this? Are there more short rollovers? Anything in terms of the Nifty rollovers?
Yeah, Sonia, Lata, interestingly, we see that comparison with the SGX Nifty rollovers and Nifty rollovers. This time, SGX Nifty rollovers have been significantly higher. Around 73% positions have already got rolled into the SGX Nifty. Now, in Nifty, domestic Nifty, we have just seen 45% rollovers being done. We may see some amount of positions getting expired in the domestic Nifty. Should we draw some parallels between the recent announcement of SGX Nifty getting changed from to SGX India or something? There could be some amount of the relation between that people, the traders between the both markets are rolling up higher positions in the SGX Nifty. Okay. So another part that in the last 1 month, that is since the April series, FIs have increased their long Nifty positions during the month. For the April series. Okay. Now, some amount of unwinding could happen there because they still haven't visibility of continuation on the SGX front right now.
Oh. Okay. In terms of individual stocks, then on expiry day today, what would you look to trade?
Very interesting counters which have been there. We have seen that TCS is something where we have seen sharp rally during the month, and the futures were trading at a discount where some amount of reverse arbitrageurs have set up their positions. So some buying could be seen in the counters like TCS, L&T, like Infratel. On the short side, or say where the unwinding of the fresh arbitrageurs could be seen, that means unwinding. BPCL comes one of the counter, followed by something like, say, Bosch or IOC. So we have a mixed bag of action today, but bias remains slightly on, say, positive side on Nifty, given that, as I said, the long rollovers on Nifty may see like expiring, and people may see the market may see some amount of buying in the heavyweight names during the last half an hour.
Okay. Yeah, no, I was coming to the last half an hour. The Nifty has been in a tight range over the past few say weeks, if you please, or last few days.
Sessions,
yeah, 10,550, 10,620. Right. You see that range getting broken today either ways? If yes, which way?
Yeah, on the bias would be slightly on an upper side. As I said, that the heavyweights which are there, the names of right from the TCS, L&T, these ones all, or even the Power Grid or IndusInd Bank, these are all on the long side, which could see some amount of buying. So Nifty has a good amount of chance to actually move above on the upper side of this range. But again, May month remains quite cautious. We are actually looking at, and say, some amount of downside in the month of May. So this last half an hour would be more of, say, technical buying, which would be happening because of the expiry related, but May series would be slightly on a negative bias for our view.
And anything different for Nifty Bank?
Not really different. Obviously, we have the HDFC, the twins, which have been holding on well into Nifty. Another interesting point, what we have seen in the April series, this movement was not driven by a single stock or something. It was broad-based rally. IT, FMCG, auto, everyone has participated. Even in the banking, good amount of participation has come from the private sector. So it was a broad-based rally, undoubtedly. But I think some amount of profit booking or cautiousness could be seen in the May series. One more point, Lata, just to tell you, the Nifty IVs, implied volatilities, have come off quite significantly in the April series as the market moved up. Now we are still, the May expiry also is having a walls of around 12% only. With election results coming on 15th May, we may see the walls inching up towards the beginning of the May series. Okay. So that's what we have to monitor. If they start moving, then there is some amount of caution in the market.
All right. Yes, of course, that will have to be monitored. And May 15th are the results of the Karnataka poll. So one should expect volatility probably to increase. Thank you very much, Yogesh Ratke, for putting a lot of cues in place before an important expiry later today. Well, there has been a fairly important event in the Indian economic and statistics space. The government, for the first time yesterday, released payroll data. That is, we got a fairly exhaustive body of data on how many new registrations have happened under EPFO, under ESIC, and under the NPS. That gives you some idea. If you're a new registrant in any of these categories, chances are you have just got a job. And therefore, is this the first way that we are able to identify how many jobs are created in the formal sector? That's the question we're asking. Soumya Kanti Ghosh, the Group Chief Economic Advisor at SBI, joins us. Soumya, of course, had a look at this data even earlier and wrote a report on it. Soumya, what are the conclusions from the data that was put in the public space yesterday?
No, I think I had a first glance at the data. I think it's a fairly good beginning. The data, I think, should improve over a point of time, because if you look carefully into footnotes, the EPFO and the NPS data are quite clean, because most of these data are now Aadhaar enabled, so there cannot be any duplications. But the ESIC data is still not Aadhaar enabled, because there are some technical issues to it. You can't force a person to get Aadhaar enabled. So I believe the EPF and NPS could be taken as a good indications of the amount of payrolls which have been created in the economy in the last 6 months.
Okay. Soumya, hi, good morning. I just want to read out to your view that came in from India Ratings, where they say that it's not entirely true to say that all these are new jobs created. All this is they have done is that the casual workers are now being brought into the safety net following the rollout of some job incentive schemes for employers in the budget. Is that your view as well?
Yeah, I think there are two parts to it, both a yes and a no. That's why the data has been given in the age bucket. So if assuming that hypothesis was true, then that could have happened actually across all age buckets. But if you look into the age buckets of 18 to 21 and 20 to 25, out of the 31 lakhs jobs which have been created, 22 are coming from that view. So even if I assuming that some amount of formalization is taking place, it is difficult to believe that everything is the entire formalization is happening is only in that age category, because these are mostly the new payrolls in the lower age category. So that's a positive thing from the data.
Okay. Soumya, as this data ages, that is, we start getting this monthly, and over the next couple of years, can we say that we will have a reliable source of jobs data in India?
I think we must have a reliable source, because every time we are at a that's the greatest missing link in the policy making in India. We're unable to explain what's the link between the real sector and the financial sector. If the data is good, GDP, we're unable to relate. I think this will be reliable data, but I hope that the ESIC, the EPFO also gives out the data as per the industry classification, because EPFO employs 190 industries, just the way the US economy does. So if that is also given over a point of time, I think that would be a fair good idea of what the job is happening and not happening.
So what's your sense? Does this data provide enough comfort to the government, which has been facing a lot of heat because of, job creation, or do you think there's a lot more to be done?
No, I think when we estimated that 15 million people are coming to the labor force every year. So even if you are creating 6 million jobs, so that means still there is a lot of gap to be filled up. So while this data is comforting for the government, but I think the employment should continue to remain a priority for any government, for that matter, in the coming years.
Yeah, but this is only one period data, isn't it? We don't have a time series. We don't know if 2018 was better than FY18 was better than. We don't have that yet.
No, exactly. Okay. And I think that may be available, because I have a feeling that the previous data before August, I think April to August, I think that data is getting cleaned up.
All right.
So hopefully if that data is cleaned up, that may be put out in the public domain at a later date. So,
all right. A final question, this is formal sector data. India has a large services economy, 60%. So you wouldn't know how many independent lawyers, doctors, chartered accountants are still working, and the large number of lower level construction workers, drivers, jobs which are being created. There is no way that gets covered in this.
No, I think you are absolutely fine. As you were saying, Sonia, that is actually happening to some process. But I think that over a point of time, the government should also bring out the informal sector data, because there is no way to count what is the total number of informal jobs which have been created in the economy. So that system should also be put in place over a point of time.
All right.
So I'm sorry, just one final number if we have time. So 2.2 million formal jobs have been added in the last 6 months. Any forecast on have you done any forecast on what the numbers could be in the next full year?
See, it's difficult to say, but I think based on this trend, the figure could be anywhere. The total number of jobs, which includes the age across different age categories, which could be new or could be existing, it could be anywhere between 55 to 60 lakhs if this trend continues.
Okay, let's hope so. I guess this is just the first set of data. We have to get it over many months and many years for us to be able to draw any conclusion between, I guess, jobs and the economy. Thank you very much, Soumya, for joining us with your quick thoughts on the first and a historic set of data that's been put in the public domain. India has been lacking a labour data for the last 75 years of its existence as a formal economy. And this is a landmark. We'll come to that later on. For the moment, the markets are as flat as they were when they started. The Nifty Bank just a little in the red. Advance declines 1:1. It can't get flatter than this. But I guess it's only preparing us for a lot of fireworks later on in the day when the contract expires. A lot of trading ideas on Chartbusters in a minute.